3.5% mortgage rates. That's available right now, or is it too good to be true? I'll be breaking down that for you on this week's episode of Prime Properties TO. And the other articles that we'll be covering will be average Ontario real estate commissions on track to drop 45 grand. Great headline. And then the next one here is we're going to be elaborating more on the Greenbelt, where we're basically finding out that certain developers are poised to stand a lot of profit with this Greenbelt being potentially removed. Stay tuned to find out exactly all of this stuff on what it means for you in the real estate market. Now, if you are looking for some help on the real estate market, there are some opportunities, especially if you're a move-out buyer. You can book a call with me using a link that's on the screen. It's right here. It's www.chatwithzen.com. Simply click on the date and a time that works best for you. And then when you see the prompt, fill in your name, email, mobile phone number, and the question you have for me, and then we'll chat then. Good day, Toronto. Welcome to another episode of Prime Properties TV. My name is Zhen, and I run a Remax in the GTA on top of making wicked real estate content like this just for you. And the first article we're going to be covering is a new 3.49% 6-month mortgage is launching soon. Should you get it? No, and let me explain why. Right? So I think the marketing perspective on this is nothing against these guys who are putting it out there. It's basically saying that, look, there's a lot of people who are opportunistic that rates are going to fall, so they're going to take a shorter term 6-month loan right now, and they're creating kind of like a product that maximizes on how to draw these buyers in. But I personally, having seen this, I think it's a little bit predatory, right? And I'll explain a little bit why. So if you were to get this 3.5% interest rate, it's about like 1.25% under what the standard mortgage rate is right now. But here's the key, right? So, let's obviously look at the fact that, the pros are the rates are lower. But this kind of reminds me very much of like the 08 US where you had like a teaser rate and then the rates went up afterwards, right? And I'm going to explain to you why I think this is quite predatory. So on non-renewal of the 1%, if you don't renew with the same financial institution after 6 months, you can't renew into another 6 months, and you have to go into 2+ to 5 year duration of fixed, and there's a variable. So here's kind of my issue. They're kind of front loading the discount on it, but they're going to lock you in. So when I look at this, I'm like, well, this is geared towards people who think interest rates are going to come down in the next little bit. And I think there's quite a bit of them. And the problem is upon renewal, that's when you're going to get shocked by high interest rates of like 1.25 or 2%, or even potentially even higher. And the challenge with a lot of these renewals is that you're getting a whole new term, meaning that a lot of people who kind of got from the A lenders and had like trigger rates and trigger points were basically going to interest only. And I've been saying, look, they're going to kick the can down the road where maybe in 3 to 4 or 5 years when they renew, we may have problems depending on the value of their properties that they purchase. But right now, they're forcing the issue on you in 6 months. Think about that. You're forced to renew in 6 months. You know you're not going to get lower than 3.5% interest rate. You're 100% going to get a value shock going right up. And that's kind of my problem. It's a teaser rate, right? And the other challenge is that if you don't renew with the same bank, they're going to charge you 1% of your fee, right? So they gave you a break on the onset to bring your business in, but you don't continue going with them, they're going to charge you and make up the money that they would have gone out of you anyways if you got a regular standard mortgage rate that's floating around the market right now. So if they're charging you 1% and they're 1.26% according to here, that's a little bit lower than the going rate. They're just trying to bring you in. They eat the 26 basis points as a cost, right? So that's my problem. Now, the other details, which I have an even bigger issue, is that it only applies to owner-occupied properties, and the property must be purchased for less than $1 million and maximum amortization of 25 years. Do you know what this screams to me? I'm targeting first-time home buyers who don't have 20%. The thing that's really brutal and why I don't like this is that when you go and get a mortgage that has less than 20% down on it, you're forced to get mortgage insurance, right? So you, as the person who's getting this mortgage, are insuring the lender, this institution, that they're going to get their money back. So they're basically hedging the bet, making sure that the government backstops their loan on these teaser rates, right? And then on top of that, these people, first-time home buyers, maybe they don't understand what's going on in the market, or when they do buy and they can't handle the higher payment, they're going to be forced to sell. And when these people are forced to sell because of land transfer tax and selling costs, they're probably going to be underwater. Because when you buy for less than 20% down, you lose like 2 or 3% of that to land transfer tax already in terms of value, and then any selling costs. So you could be negative underwater, especially if the market continues going downward. So that's why I think this is incredibly predatory right now. And if you don't understand the mechanisms on the back end on how these guys are making money, this probably just looks like a really good deal. But these guys have thought of this very, very well and very thought out, that they're going to make money regardless because they're backstopped by the government on the mortgage insurance, or they're going to lure you in, or they're going to make you that 1%, which makes total sense. Now, look, is there an opportunity to use this? Yeah, absolutely. So if you are that person who maybe has more than the 20% down, you're doing 25-year amortization, and you want to take on the teaser rate and you're okay with the variable, yeah, you can go with them. You just probably want to figure out what their discount on the variable is, or what their fixed is on the aftermath of it, because you're going to have to renew with them or pay a 1% fee, which is brutal. So this is where you really have to understand the fine print. And when I saw this, I was like, Jesus Christ, this smells like 2008 US all over again. So I had to make a video about this, just kind of talking about this in case you're kind of contemplating this, because in the current market right now, end users are the ones shopping around, and there's still a little bit of like, not FOMO, but like they still want to get into the market before things get heated up, because there are still multiple offers on some properties right now. So you have to be careful on what you're doing with these mortgage products out there. Now, if you found this content useful, especially if you think someone who's contemplating this because they're trying to lure you of the teaser rate, make sure to share this with them so they understand some of the fine print and how the mechanisms on the mortgage work. And it's not I'm throwing shade at the company. I just want to put it out there. Maybe they mean very well, but at the very least, I can see where, there are little potholes that people can step on and they don't understand how this stuff works. So make sure to share that with them. And while you're at it, just, subscribe to the Practical channel. Now, if you are looking for some help on how to navigate this and kind of prevent potholes like this, especially if you're a first-time home buyer, you can book a call with me using the link that's on screen right here. It's www.chatwithzen.com. Right, next article here. We got average Ontario real estate agent commissions on track to drop $45,000. Woof. I think this is a really good headline just because I think the zeitgeist of how many people hate realtors are tons. It's really high up there. We have way too many of us. I've been through down markets before, and that's why what we saw in 2021 was definitely not going to last, right? So anyone who's having like a record year, which should have been technically everybody because prices went up, sales volume went up, the piece of the pie got bigger, right? But if you don't prepare yourself for like slower markets, or you just kind of got started and you haven't seen like things come to a halt, then you're in for a shock. And I think this is kind of good for the market. It's a little bit of a cleansing. And I personally think that the $45,000 mark is probably a little bit on the lower side, right? Like if I were to compare kind of earnings in 2021 to 2022, if you're at a stagnant, you should probably be losing about, I would say 30 to 40% of whatever you're earning as a realtor right now, just because that's how big of a piece of pie that's being cut out. Now, the problem is there's a lot of people who aren't actually trading. I think people with licenses don't actually do a deal. So, the averages could be skewed. So I think people who are making less than $45,000 are probably making even less than that. But then obviously they could be starting from a higher base. And then those who aren't even making any deals to begin with probably aren't making any deals to begin with right now, right? So this is just kind of like an interesting thing to look at because everyone always talks about how much money realtors make. Look, this is still at the end of the day a gross amount, meaning it's before taxes and expenses as a business owner, but it's still quite a bit, right? And if you're in the real estate industry, you should prepare for this because when the good times are good, you should definitely prepare for the worst and have a backup plan and a way to survive, right? Because you don't want to be selling real estate where you need the next deal because then you're not going to be acting on your client's best interest. And you don't have a pension or like a CPP unless you're paying into it, right? So you need to have money set aside for retirement, especially as a self-employed person or business owner, right? So hopefully real estate agents out there, you see this coming, you had a little bit of like a buffer and just build out your business, right? Like this is where you double down on your skills, get better at what you do so they can be a better realtor and serve more people, right? That's it. Next article, they recently bought Greenbelt land that was undevelopable. Now the Ford government is poised to remove protections and these developers stand to profit. Oof. This to me sounds like a hit piece against developers. And look, I'm not pro-developer or bad developer. I'm just pro make more houses, right? And if the developers are kind of call it the necessary evil for them to make some money to make some houses, fine. You have to incentivize the private sector to do these things because clearly the government's not going to do it, right? So is there like a conflict of interest? Absolutely. Do I have a problem with it? No, just build the homes, right? So basically we talked about this last week, I believe, where we're saying, look, some of these things are going to come out where developers would have bought some land and now they're getting a windfall because they're going to build on it and make a lot of money, right? And this is exactly what they're talking about, right? So the timing of it, raises questions and, is there kind of inside trading per se that these people are working very closely with the Ontario government, Ford's government, and knew that some of this parcels of land would be, available to develop on and they bought in advance? I don't know, maybe they'd have to do some audit and check, right? But when I look at this, which by the way, hats off to Toronto Star for putting this map out there on some of the properties out there, but this is totally a hit piece, right? But when I look at this, I'm like, if I were a developer looking at this, right? Would I have bought properties in these pockets that are near the Greenbelt? Like this one right here, which is by Elgin and Leslie, I think that was already bought before any of this. So you can see the purchase date was 2010. So that was being developed already. Now this one right here, I actually knew it was already going to be developed for a long time because this is by the Pine Valley and there's just been so much development near there. You can see that the green is very sparse. At some point, if they were ever going to change the Greenbelt, that seems like, you know, a pretty good bet. Now, when I look at like some of these maps over here, like they're pretty much kind of on the brink of like where the Greenbelt would or would not end. So if you had some money, like if I were to land bank here, it would make total sense, right? Like these two pockets, like this entire land was basically already bought by a big builder for a long time. They were land banking this. So if these are already kind of ripe to get, you know, developed at some point once Scarpetti let them, this makes total sense too, right? I think the kind of biggest like red flag per se is maybe this one. This one's a little bit out there and this was bought quite recently, right? And I think this is kind of where the hit piece is coming from, right? So they're saying that, look, wealthy developers stand to gain a huge amount of money when farmland is rezoned for development. And I totally agree, right? Like if they were able to buy something and then develop it, then that's a huge profit for them and they're going to make some money. But what about all the farmers that just have super valuable pieces of land where the builders are going to be knocking on the door, right? Why don't we have any of the issues with like the farmers who have land that just basically got off the Greenbelt, right? And now they're going to be poised to make tons of money, like multi-generational wealth. Is it because they're not the developers and it's okay for them to have a giant windfall, but not the developers? See, I mean, that's why I kind of think it's a little bit of a hit piece. And like I highlighted here, it's a little bit of sensationalizing. But at the end of the day, right, like for me, I don't really care. As long as they're able to build more homes and house more people, or all the people that comment, I think it makes total sense. And if they stand to make a little bit of profit, that's perfectly fine. Because when land is developed, right, like there's construction jobs, the developers make some money, like us as realtors make money, mortgage brokers make money, what else? Lawyers make money. There's a whole pipeline of work that happens, right? So why not just let it happen? So why not, you know, get off the kind of backs of these builders who are creating some jobs and just let them make some money and build, because you know what? We need the homes anyways, right? Why are we going to make such a big deal out of this if they're trying to produce the 1.5 million homes that we're targeting to get? I don't think it's not that end of the world. It's kind of like the city scratches their back, they scratch theirs, right? It's kind of politics. Anyways, hopefully this gives you an idea of what's happening in the real estate market. If you are looking for some help on how to navigate this real estate market, you can book a call with me using the link that's on the screen. It's right here, www.chatwithzen.com. Until next time, your move, your future. See ya! Now that you're done watching this one, how about this one? Oh, you know what? This one's good too. Ooh, this one's really good. You know what? Just watch them both.